If you own an investment property along 38 and you notice your rental revenue has shot down probably 20-25% in 2023, you're definitely not the only one. I'm here with Alex Curry. He's the Director of Business Development for 360 Blue, one of our largest rental managers that we have in 38. And I think it's super interesting as we talk about 2023 as a new benchmark year compared to what we saw, pre-pandemic and during the pandemic. What did we see in 2023 that led to some of these reductions or deceleration in rental revenue?
Great question, Noah. One of the biggest contributors is the world being opened up for travel. First half of this year, Europe saw its highest number of guest nights booked in a decade. And it's an interesting parallel because in addition to that, they saw a 12% increase compared to the same time last year in the first half of 2022. When you look at that increase and you look at our decrease in demand or occupancy, which was right around 10 to 12% the first half of this year to this area, you can't help but notice a coincidence there. So that to us is a significant factor for sure. There's a variety of other factors as well, but that was the most notable one to us.
I think it's crazy too, having that conversation with my clients where we always were the drive-in destination during the pandemic, because this was probably one of the easiest places to go. Our airports have expanded. People know more about 38 through publicity. But now, as I check out where my clients are at personally, they're in Greece, they're in Spain, they're in South America, they're traveling elsewhere compared to 38. I think the biggest thing that we can look at too is looking into Q3. Is there anything that we notice post-August, as we head into September and this year, and kind of looking into Q4?
So we've stabilized in regards to occupancy, average daily rates, and RevPAR, which is the balance between occupancy and average daily rates. If there's one KPI most synonymous with return on investment, it's RevPAR.
Gotcha.
When we were experiencing this downward trend of 10 to 12% first half of the year, we're now in a spot where looking at Q4 of this year relative to Q4 of last year, occupancy is only behind 1 to 2%.
Okay.
Average daily rates in some cases were a little bit up, and in RevPAR in some cases were a little bit up. Really it kind of depends on community and property. But overall, the important takeaway is we're in the ballpark, right? We're in the neighborhood of Q4 last year for Q4 this year, which to us indicates that things have stabilized. Folks have gotten Europe out of their system to some degree. So there are some things to be encouraged.
Awesome.
Another important takeaway is you got to look at 2019, right? And when you look at this same day in 2019, we are way up in average daily rates, we're way up in RevPAR, and we're still up in occupancy, which wasn't necessarily the case the first half of this year. First half of this year, occupancy was looking eerily similar to 2019 levels. So in my book, I think things have stabilized and improved, and I'm optimistic about next year.
I think that definitely leads into, when you look at 38 as a short-term play, chances are it doesn't work out too well. If you're looking to hold something for 1 to 2 years, especially with a lot of transition that we've seen recently, we can't control life events like the pandemic or elections or anything like that. But if you look at 38 as a long-term hold strategy, especially having the transparency of someone like 360 Blue managing that property, I think you're going to be in pretty good hands. I think as we look into, we're wrapping up this year, we're looking to 2024. Are we going to look very similar to what we saw this year?
I think so. I think we're going to see some better stability, especially in the first half of next year. I don't think we're going to experience the downward trend in occupancy that we experienced in the first half of this year. More stable market. I think there'll probably be some equilibrium between occupancy and average daily rates. Probably a bit higher occupancy, bit lower average daily rates, but overall, a very similar year.
Awesome. And I think we can kind of say the same thing about when we look at the rental market, especially in terms of investment properties. We used to look at 2019 as the benchmark, or at least I did. In 21, 22, you had these inflated projections from tons of rental management companies. I always found that 360 Blue was a little more conservative in their approach from the back-end data, and that they were actually looking at 2019 as a benchmark year. I think we're gonna start seeing a little bit more of those turnovers too as people get used to the new normal. And that's why I said, if you're looking at it from a long-term hold, if you're a seller, pricing strategically where it makes sense for not only an investment property, but for those looking for second homes or looking for a primary residence, it makes sense to price your stuff strategically in this current market. Especially when you look at investment properties, there's a ton of them right now. Are you guys seeing an influx of rentals coming into 360 Blues management, as a company?
We are, and that's also another factor that has put some downward pressure on prices, right? It's just basic laws of supply and demand, right? And with the increasing supply of vacation rentals, that's inevitably going to put some downward pressure on prices. And that's why it's so imperative to have a company that has a very effective pricing strategy, that's making adjustments in real time, but also a very robust marketing team. Marketing today is now more important than ever. Right. For the past 2 years, anyone could have really entered this space and just increased rates and been fairly successful, but that's not the case today.
Is there anything that you're noticing? Obviously, we have an influx. I want to say year over year was about a 22% increase in number of short-term rentals permits. Was it 22, 25?
Somewhere in that neighborhood, yeah. Yeah, that's a good rough statistic.
In your background, using the data that you have, is there anything that a renter or an investment property owner can do to kind of differentiate themselves from the rest of the supply?
Amenities are key. Being in the right community is key. Having the right amenities, a private pool is always essential. Of course, if you're a golf front, that's a game changer. Those are the two big ones, I would say.
Are you noticing anything? Because from when I first moved here, it seemed like people were booking in advance from like 6 to 9 months out, 3 to 6 months out. Are you seeing that time shorten?
Yes, we are seeing a much shorter booking window today. I think folks are more price sensitive than they were a couple years ago, and they're waiting last minute to get the best deal possible.
Gotcha. So if you have an investment property out there, don't fret that you're not seeing, summer rentals right now, because we're seeing that time shorten up a lot. If you have any questions, please feel free to reach out to Alex. What's the best way to contact you?
Management at 360blue.com.
Awesome.
Or Alex at 360blue.com, either or.
Perfect.
And then another important takeaway is the data is out there to keep management companies honest. So when you talk about rental projections and you're trying to determine, okay, who's most accurate and who's going to most maximize my client's return on investment, any esteemed company should be participating in a software called Key Data, which is a market data sharing platform. So that allows a company to not only evaluate their inventory year over year, but see everyone else's, which gives them great insight into the market, right? You can see the entire forest, not just the trees, right? And with that comes reports that cannot be manipulated, right? So if you want to know who's going to best return or capitalize or maximize my client's return on investment, request a RevPAR report on comparable properties. Because that report can show, okay, here's how we're doing on 9-bedroom homes in terms of RevPAR relative to everyone else, right? And that's going to tell you a lot. That's going to tell you who's number one. Yeah. And sometimes it's favorable to 360 Blues, sometimes it isn't. But the important thing is it keeps everyone honest.
Yeah, I love that. If you're a buyer or seller, I hope this is super helpful. If you own an investment property, definitely talk to Alex to get as much data about your property as you can. And we can't wait to see you guys at the beach soon.